What is the difference between a balance sheet and an income statement? A balance sheet is a picture of the company or a snapshot at one point in time, normally the end of the financial year. The balance sheet shows the assets, liabilities, and equity position at the end of the financial period. Okay, but how is that useful? Well, the assets, they are what the business owns. Liabilities, what the business owes. The difference is equity or residual interest. The income statement shows the performance of the company for a 12-month period. Revenue less expenses equals net profits. The statements are useful for shareholders, management, employees, government, lenders, and more. My name is Shaktee Ramtohul, and I'm a member of the ACCA.